Wall Street just got a wake-up call, and it came from one of its most reliable bulls, Tom Lee. In a market clouded by tariff fears, rate anxiety, and fears of overvaluation, Lee didn't flinch. Instead, he issued a bold reality check. This is the most hated V-shaped recovery in history. Investors are still waiting for the perfect pullback that may never come. And as they sit on the sidelines, the market's true leaders are quietly positioning themselves for dominance. At the center of this stealth rally, Apple. Lee believes the market is grossly underestimating Apple's next move. While critics claim it's lagging in AI, Lee flips the narrative, reminding us that Apple didn't invent smartphones, but when it entered the game in 2007, it redefined the entire industry. Now, he says Apple is quietly preparing to do the same with AI. But here's the kicker: it doesn't need to race to the front. With its unmatched integration of hardware, software, and user privacy, Apple has the infrastructure and the trust to transform AI on its own terms. And this matters now more than ever. Inflation is easing, interest rate cuts are on the table, and earnings resilience is crushing recession fears. Meanwhile, most investors are underexposed, misreading the signs, and overlooking the one company that could reshape the AI race from the inside out. In today's video, we're diving into Apple's silent AI takeover and revealing two other stocks riding the same under-the-radar wave. If you think the market has already priced in the AI boom, think again. Apple is just getting started, and these three stocks could be the next big winners. First on the list is the tech titan that's often underestimated when it comes to AI, Apple Inc., ticker symbol AAPL. While many in the market have labeled Apple as a laggard in the AI race, Tom Lee isn't buying it. He argues that Apple doesn't need to lead the charge in artificial intelligence, it just needs to integrate it wisely across its ecosystem, and when it does, it could reshape the game just like it did in 2007 with the iPhone. In a time when inflation is cooling, interest rates are peaking, and investors are hunting for resilience, Apple's unique blend of brand power, user trust, and ecosystem dominance could turn quiet moves into market-shaking results. Apple's recent performance hasn't exactly wowed the street. It's been one of the weaker names among the Magnificent Seven this year, but that's where the opportunity lies. In China, Apple is showing new signs of life. Aggressive price cuts and strong demand for the iPhone 16 Pro models have reignited momentum in a region that has been a thorn in its side for years. For the first time since 2023, Apple is logging sales growth in China, with several iPhone models dominating the country's major mid-year shopping festival. Meanwhile, behind the scenes, Apple is reportedly in talks with OpenAI and Anthropic to overhaul Siri, an overdue but essential pivot that could re-establish its position in the AI conversation. And while rivals like Meta are poaching AI talent, Apple still has one massive advantage: its unrivaled ability to deploy hardware and software updates across more than 1 billion active devices. Yes, Apple faces real challenges: tariff pressures, China dependence, and AI skepticism, but betting against Apple's ability to adapt and dominate has rarely paid off. With earnings on the horizon and AI upgrades brewing, this might just be the quiet before the next Apple storm. Stay tuned, because the tech world's most disciplined giant may be about to surprise everyone. Next up is a transformative force in the making: Synopsys Inc., ticker symbol SNPS, and by extension ANSYS. While Apple is preparing to redefine AI from a hardware-software integration standpoint, Synopsys is attacking AI from the inside through the very architecture that makes artificial intelligence possible. With their merger nearing final approval, Synopsys and Ansys are on the verge of creating a first-of-its-kind, end-to-end AI and simulation powerhouse that could shape the next era of semiconductor and systems innovation. For those unfamiliar, Synopsys dominates the EDA, or electronic design automation, market, which is essentially the brain of chip design. Think of it as the toolkit that companies like Apple, Nvidia, and AMD rely on to create their most advanced silicon. Ansys, on the other hand, leads in simulation software that predicts how products will perform in the real world, from thermal performance to structural integrity. Put the two together, and you've got a company that can offer full-stack AI-driven design, simulation, and testing. In an AI-first world, where chips are evolving faster than ever, this kind of vertical integration could become indispensable. The merger has already cleared regulatory hurdles in the US, Europe, and even the UK. Only China remains, and recent developments suggest that approval may be just weeks away. Synopsys and Cadence have already been greenlit to resume business in China, an encouraging signal. If finalized, This deal positions Synopsys as a category-defining player not just in EDA but across the entire chip and systems design value chain. Yes, there are risks, share dilution, integration challenges, and initial leverage. But management has a credible deleveraging plan, and the strategic fit is undeniable. As the AI hardware race accelerates and Apple seeks deeper control over its chip development, Synopsys' expanded capabilities could become even more critical to enabling next-gen iPhones, Macs, and wearables. Simply put, if Apple is building the future of AI devices, Synopsys may very well be helping them design what's under the hood. And rounding out our trio is the undisputed king of AI chip manufacturing, Taiwan Semiconductor Manufacturing Company Limited, ticker symbol TSM. While Apple dreams up the next AI-enhanced iPhone and Synopsys provides the design tools to build it, TSMC is the one company physically producing the chips that power it all. This isn't just a strong link in the supply chain, it's the link. TSMC recently reported another stellar quarter, showcasing massive year-over-year revenue growth and expanding profit margins. The driver, skyrocketing demand for AI chips. In fact, 60% of TSMC's revenue now comes from high-performance computing. That's AI chips, data center silicon, and advanced processors that power everything from ChatGPT to Apple's A-series and M-series chips. With a market share nearing 70% in the global wafer foundry space, TSMC is essentially the only game in town when it comes to bleeding-edge semiconductor fabrication. And while many chip makers are still grappling with cyclical slumps or struggling to catch up, TSMC is thriving. The company delivered strong free cash flow, raised its outlook for the next quarter, and continues to invest in capacity expansions, including 3nm and 5nm nodes used in the most advanced AI applications. What's more, it's doing this profitably, with expanding gross margins that reinforce its dominance. Apple is a major customer, relying on TSMC for everything from iPhones to MacBooks. And as Apple leans harder into AI and possibly unveils new chip designs to power Series' next evolution, TSMC stands to benefit directly from that ramp-up. The deeper Apple goes into AI, the more business flows to TSMC. In a world racing to upgrade data centers and devices for AI performance, TSMC is the foundation. It's not just enabling the AI boom, it is the AI boom. For investors looking to ride the wave from the very core of the tech stack, TSMC remains a compelling long-term play. As the AI revolution accelerates, the real winners may not be the loudest, but the most essential. Apple is quietly positioning itself for a massive comeback in AI, Synopsys is laying the groundwork for next-gen chip design, and TSMC is the irreplaceable engine powering it all. Together, these three companies form a silent powerhouse, driving innovation from device to design to production. In a market still underestimating their combined strength, now may be the perfect time to pay attention. If you found this video insightful, make sure to like, subscribe, and drop your thoughts in the comments. Which of these three stocks do you believe will lead the next wave of AI? We're just getting started. See you in the next one.